Hey everybody, welcome to the game plan. It is that special day, the silver 100 bar ounce giveaway. I'll be doing it in just a little bit, but thank you for tuning in today to Verified Investing's game plan. I'm here at the studio and we are going to get into some hardcore data. We have some PCE numbers out there and some other key things in the docket. All right, so let's just run over here real quick, and I just want to take a quick look here. And before we get into this, let's just look at this. So this is our scanner. Everyone from Twitter and from YouTube has been put in here, and it will go when I do it in just a little bit. We're not going to tease it for a second, but again, we will in just a little bit give away that 100-ounce bar. Now, before we get into this, a couple things I want to go over. We have to look at the economic data released today. Okay, so the first things first. What we see here is PCE data came out. Now, the first reaction to the market was that we did see a surge in the S&P and the NASDAQ, as well as gold starting to rip up. And the reasoning behind this, right? So if we take a look at this, what happened? Now, remember, before I get into this data, the CPI and PPI data came in just a couple weeks ago, and it was hot. It made people nervous. The markets got itchy. They started to think, oh my goodness, is inflation starting to uptick again? Well, this PCE data didn't really tell us that it was going down, but it certainly didn't confirm that it was going back up. It came in essentially in alignment. So just to go over this, PCE price index previous was 0.2%, forecast was 0.3. This one actually came in at 0.2% as the previous, so that was a little bit better than expected. Core PCE price index. The previous was 0.2, expected was 0.4. It came in at 0.4%. Core PCE price index, again, 2.9%. This number a little bit whiffy, so we're not going to go over that one. Next down, we go to jobless claims. And the reason why, guys, this number, I didn't get the full effect of the number of what it should have been. So let's skip on to that one till we get a good, accurate number there. Jobless claims last week were 201,000. Forecasts were 209, and we got in at 215. So basically, in all fairness, with jobless claims, and these are people filing for unemployment, remember that that's, again, a number that has been staying between 200 and 220,000. That number is basically a very solid number. It tells you that jobs are still plentiful. People are not getting laid off, even in spite of all of the news that we're hearing about these bigger private companies or public companies laying off people. It's not having such a big effect just yet. All right, personal income jumped 1%. This was a very good one for the individual. I don't know how many of us experienced this. I don't think I necessarily did. But the point being is that this number, again, could be future inflationary if people are making more money. And again, this number came in at a 1% increase versus a 0.3%. The one kind of one that's making me nervous is down here. I know it's a little low on the chart here, but the food prices increased 0.5%. And for me, guys, if you're like me, if you see what's going on out in the world, energy and food, those are the two major components, along with housing, that people spend a majority of their money on. And to see this jump here, to me, is a little concerning. But having said that, the market is focusing on this here, the PCE, coming in basically in alignment or even just a little bit better. All right, we have a couple stocks that we have to look at here that are moving today. CRM reported earnings, right? So CRM reported earnings. It came out with solid earnings, revenue, etc. Their guidance was a little weak. They talked about only growing in the single digits, which was a little surprising. Initially, the stock went down. I think it's still down just a little bit, not a big move. But the kicker here is these share buybacks, right? So they basically said, hey, guys, we're going to do a dividend. We're going to do share buybacks. And I've been a big proponent of saying that these share buybacks, it's financial engineering. Now, it doesn't mean that it doesn't help the stock go up. It does. But just understand it for what it is, guys. I hope you learn these type of things from me. So when a company buys back shares, and in this case, I think it was another $10 billion that they announced that they were going to buy back shares, they basically buy them from the market, and then they basically make them vanish. The shares go into oblivion. So there's no longer those shares available. It lowers the amount of shares in the company, which just naturally makes the earnings go up. So even if earnings stays at $1 per share, If you lower the amount of shares that's divided by, then naturally earnings per share could go to $1.15. It's again called financial engineering. Apple's been doing it for a long time. You wonder why Apple's revenue and earnings go in opposite directions, right? Their revenue's been declining, but their earnings just keep getting better and better because they're buying back stock over and over again to make it look like they're doing a lot better and lower their PE ratio, essentially. Okay. Snowflake. This one's a big one, guys. Snowflake's getting crushed, down 22%. This is a pseudo AI company. It's not AI chips like NVIDIA, but it is involved in AI, and this is not a good report, guys. Even the CEO is leaving the company. So that is down. We're going to look at that chart in just a minute. Okta, which is kind of a cloud play, that's having a big move of 26% in the pre-market. And AI, which again, C3 AI, this one also had good results. Their AI stuff is going well. It's up about 15% in the pre-market. Lastly, just want to mention this, guys. Weight Watchers lost Oprah as a spokesperson. She resigned from the board. And again, just common sense tells us if these weight loss drugs are really taking the world by storm, or at least the U.S. by storm, there's going to be a lot less people that are interested in going on Weight Watchers if they can just take a drug and get the same effect. All right, so that's a couple things that I just wanted to touch base on here in the morning blast. What I do want to do is just go into some charts real quick. And again, we'll do that drawing in just a little while. All right, so what we have here before us, this is the US dollar chart. And this is when that PCE data came out. You can see the dollar dropping. Now, this is an intraday chart, so it looks a lot bigger than it is. We were at 104. We dropped down to 103.80. It's only a 20-cent drop on the Dixie. Not a huge move, but remember, the markets, you go inverse to this. So for all of you out there that don't know this, in general, the way the market trades is when the dollar declines, right? This is the US dollar. The stock market will go up. And that's exactly what we're seeing today in the action of the pre-market S&P and the NASDAQ. All right, in addition, what we also know is that the market craves free or cheap money, right? Free or cheap money. It's like a drug-addicted market. They want this. They need this. They need it constantly, like a druggie. And what we can see right here is that when that PCE data came out, the 10-year yield declined from 4.31% to 4.256. That's actually a big drop in yields. And again, guys, when yields drop, the stock market goes up. And that explains why, going into these numbers, the stock market was down pre-market, and then we saw, again, a big move to the upside. All right, so just a couple little tidbits on that chart. I do want to just flip over to the dailies on these to give you guys a bigger perspective. Remember, the daily chart on the 10-year yield was bubbling up against resistance. So again, if we just look at resistance and support, we knew that there was somewhat limited upside on the yields, and again, we're seeing it getting pushed down. Now, it's not a huge push down. More than anything, I'm kind of curious. If we break 4.2% right here, that would kind of take out all these little lows right here, and that's where you could get a move back down to this trend line here. But either way, just a little dump out on the yields, a little dump out on the dollar. It kickstarts the risk on move. And again, off to the races we go in the stock market this morning. Now, again, speaking of the stock market, we have to look at this picture. So this is the S&P. You can see the S&P from those moves. Again, looks huge, and it is a decent move, right? We were trading pre-market around 505. We're at 508. So, I mean, it's not a 1% move. It's about a 0.5 to 0.75% move on the S&P here from the lows. But again, look at that move to the upside, and that's directly in proportion, inversely, to what the yields in the dollar are doing. Now, again, the key is going to be this. Look at this chart. So again, how much tighter can we get on these two lines that keeps the price in this range? So again, as of now, where are we trading? We're trading right up in here. We're not at the top yet. I think we would have to get to about 512 or so, give or take. But right in this range, we went from getting close to this line again to now pushing back up inside of this and staying inside of this overall range. And I've said to you before is that if this market is going to drop, it has to take this level out, and it has to confirm, not just a close below, needs to confirm to the downside. Confirmation, again, is one of those things you just don't leave home without it. It's that important of a factor. Okay, so on we go, guys. And again, using these TradingView charts, fantastic charts as always. I'm sure a lot of you guys already have TradingView. Quickly looking at a couple key stocks. So Apple continues to flirt with a breakdown here. We can see this longer term trend line connecting these lows. If I zoom in, we know that, again, Apple had 2 days ago, right, or 3 days ago right here. It closed below the line. And did it confirm? No, it can't confirm. You can't confirm until the next day, right? So again, for those of you that remember, I taught this probably about a week ago. I taught confirmation. But the next day, we were trading below on Apple, and then they had that news that they were canceling their car plans and putting all those people into AI. And all of a sudden, the stock went up. Well, yesterday, it came right back down, closed below again. But guess what? Today, with this rally, it probably, and I say probably because we don't know, but here's your pre-market, certainly doesn't look like it's going to confirm again today. They are doing everything they can to save this stock from rolling over and collapsing through that level. Because, this is the kicker, guys, when you have a trend line like this on the daily chart, if this were to break, it goes back again to January of 2023. Over a year ago is when this line started. If you break this here, okay, right here, and we confirm, you're at minimum going to 165, and it could be the beginnings of a much bigger corrective move where we could literally see, I mean, this is kind of my general target zone right here, and that's all the way at around 150-ish, give or take, on Apple. And again, think about a $3 trillion company dropping that much. That would impact the markets. Even if NVIDIA stays relatively strong, $3 trillion market cap still going to impact the markets, and likely it would drag down other plays as well. All right, let's go to Snowflake. Here's your Snowflake chart. Remember, I talked about their earnings. Their earnings, not good at all. Take a look at that massive drop down, over 20%. Where would a tradable level be on this? I mean, if we're going to, and again, I'll be in the live trading room today at InTheMoneyStocks.com, which, by the way, we're going to be launching a merger here of In The Money Stocks with Verified Investing, and all of my stuff will be on Verified Investing, along with other traders out there that I don't even know. Some of them we're bringing in. Some of them have come in already, and they're starting to work and utilize it. But my goal, again, for Verified Investing is a one-stop shop of some of the best minds to follow in this market. Okay. So right now we're trading in the high 170s on Snowflake. If we look at this, guys, where is that? We're right in this general vicinity currently. Where is your key support level? Well, you do have support right here and right here. So we're talking about, again, we might even be below that level just a little bit. Yeah, that's 181. So honestly, what you got to do is you got to go lower. So those lines, to be honest, when we're trading lower than that pre-market, cancel that level out. Good lesson to learn there. This is the level that I would say is interesting to me. Pivot high, and gap fill right here. And again, if we look at that, these lines are generally in an alignment, and it's right at 170, 171. That's not that far away. About $7 drop from here gets us into this key technical level. That might be a day tradable level that I take with members in the live trading room today, should we get down there. Okay, next up, CRM, guys. CRM doing almost nothing. So again, initially dropped, then popped, then fell off, and it's basically trading flat. When a stock has earnings and it's trading flat, I couldn't care less. All right, it's a non-event. Tells you that price of the stock was essentially where in earnings came out, and so there's no reaction whatsoever. Okta trading up at 108, guys, here. If we look at Okta, great move here real quick. And again, if we flip over to the daily chart, look at this if I zoom out, guys. Look at this. So again, going into earnings, do you think that this chart was potentially a buy or was it a short? And when you look at this, and again, by the way, you don't just short or go long based on, oh, it's been beaten down. You have to actually look into the chart and find the factors. But if you look at this, I mean, this thing was trading at $300, and look at this little bullish pattern down here. It was just kind of consolidating right here off of this up move. That looks like a flag to me. In addition, you have a huge gap fill right over here. So when we look at this level of where this will have some resistance, now again, just because there's resistance, it doesn't mean I'm going to look to short it, mind you. But basically what we can see is if we move our cursor right up, so we're above this here, we're trading here, look at this pivot high here, okay? Right there to there to there. That line is right around 110 to 112. That will be some resistance. But again, please understand, when you have a stock beaten down like this, it could short squeeze. We've seen a lot of short squeezes, right? We've seen Carvana. We've seen some of these other ones out there that are just absolutely insane. So be really, really careful if you decide to do it. I likely will not do it because it's too high on the risk curve. Everyone loves their Tesla analysis. Real quick, guys, when this thing was down here, I said buy it. It's going to go back to gap fill. It has gotten basically back to gap fill right here. And again, I think it touches it today. It's just a little shy, but you're looking at around a 210 price target here. Once it gets there, it's a little trickier. Can it break through this area and actually move back to this zone, which is a big downsloping trend line around 250 to 240, or does it stall and get rejected and come back here? But again, this was something, if you go back literally 3 weeks ago in this game plan, we talked about this was a buy down here at the 170, 180 level, and it's actually been a very nice mover to the upside. All right, AI, not much to say here, guys. Again, it is up on earnings very nicely. This is, again, a proponent of a potential squeeze, so be careful. I'm not going to mess with this. You'll have a little bit of resistance in my book around 37, and then really nothing until 44.5. So, again, just be very quiet. All right. Having said that, guys, I think it's time we do this drawing. So let's get this party started. So what I'm going to do real quick, guys, is we're going to bring this up. We're going to flip over to the drawing point here. And again, guys, just a reminder, I'm going to grab this silver because I'm very happy to do this. And just before we get started with this, and I'm grabbing this bar out, it weighs freaking a ton. Again, Engelhard, awesome. But before I do this and before I click this, I did touch base with TradingView, and I thank them from the bottom of my heart. In fact, it almost brought a tear to my eye today, is they were so excited to participate in the wheel. And if we could just pan over here, guys, this is the wheel of appreciation. And you guys that watch me, I appreciate you. You guys that comment kind things, I appreciate you. And we are going to fill this out with amazing prizes. I want to spin it once a day. And again, every single game plan, I want someone winning something. And just to put this in perspective, TradingView said, hey, we'll take 2 spots on this wheel, and it could be a full year of premium. That's $600 each, guys. So a full year premium is $600. And they're willing to have that on the wheel for you guys to potentially win on a daily basis. I'm in the process, and we're in the process here at Verified Investing, of asking and getting other people to donate. I'm hoping Kitco comes through with some gold and silver that I can put on here. I love Kitco, obviously. I've worked with them on many projects before. But again, gold, silver, crypto, amazing things. So I just want to say one thing. If you are someone who owns a great company out there and you're watching and you want to get in on this, I would love it. The only thing I ask is that they're good quality prizes, like a TradingView year. That's amazing. I'm hoping Lux Algo donates a year or so of their service that we can have on here. But again, reach out to us if you are interested. I'm going to be putting a winning trader series up here. The value there is $5,000 at least, all right, of the winning trader series. That's what it goes for right now. And we here at Verified Investing will have other things up here as well. So again, the goal is I want pretty much everything to be valued on here at anywhere between $300 to thousands of dollars, and be giving that away to you guys. All right, without further delay, let's click this button and see who our lucky winner is. Here we go. Here it goes, guys. Everyone's in here. Dang, that's a lot of people. All right, what are we going to do? Here it comes. And what's the winner? One Mike, guys. One Mike underscore. One Mike underscore. Now, I don't know if this is on Twitter or on YouTube. I'm going to ask my team to verify and to let us know. But that is your winner right there. Congratulations, guys. One Mike underscore here. And again, we will verify it and make sure to reach out to us. What I'm going to do, guys, this is another little thing. You have 7 days, all right? If in 7 days you don't reach out, then I say we give this away to someone else. So 7 days to claim your prize. You'll get with us. We will verify you. We will do everything we can to make sure that it goes smoothly. But again, guys, I thank you from the bottom of my heart for being along this journey with me, helping the game plan reach so many people out there. And again, the kind words just drive me to give you guys the best I have. All right, on that note, guys, let's go over here and get right into our next charts. Our next chart, of course, is Bitcoin. All right, so Bitcoin, guys, amazing move yesterday. Kind of a pseudo blow off top yesterday, and it dropped. I mean, this is kind of the crazy thing about it, is that Bitcoin jumped up to 64,000. It then dumped out to 58,000 within like 16 minutes. These type of moves are incredible. They're also very risky. And I would just say this, is that in general, you have to be aware that, you know, if you're a long-term bull like me, you want Bitcoin to be adopted by lots of smaller investors, grandmas and grandpas. And I do worry that these type of moves make it a little bit scarier for those type of people who are on a fixed income, maybe they have their retirement income, to invest in it. So again, hopefully it settles down. One thing I wanted to show you, so these two lines up here are resistance, right? And I talked about these yesterday, right? What did I say? I said, once we get above 60, 65 is your next level. Well, yesterday we kissed 64, so we're right at the cusp of that. Next was, what is that? The next one is 69,000, right? That's your former all-time high. The kicker here is, look at this. This is just interesting to me. If you take this initial move from this low right here to this high, so the high move, and then we had, remember we had the 20% correction, the 20% correction right here. Then if you take that low to this current high, it's almost identical, about 24,500, 24,500. That's what we call in the business a measured move. Now, again, does a measured move guarantee that it's going to stop there? Not at all. Not at all, folks. All right, but nonetheless, these are little things that you just want to pay attention to and see if it plays in as a factor. Lastly, I'll just mention this, guys. You know, I can't help but crack up at people like, they're like, oh, Gareth must have been wrecked, you know, on his short, because I'm short at 56,403 or 405. But please understand, folks, that I diversify my portfolio. My short in Bitcoin makes up about 0.2% of my net worth. And again, I don't use leverage. So again, yesterday when I was out of the money about 15% when I was in from my level and it got to about 64,000. 15%, no leverage. I'm not using 50 or 100x like a lot of you nut jobs out there. It's not that big of a deal, especially in a diversified portfolio. So no, it's not a wrecking. There's nothing like that. That's almost just ridiculous. And honestly, I would just caution you from 24, 25 years of trading experience. If you are someone who thinks that's a wrecking, then you're likely using crazy leverage, and ultimately you will lose all your money over the course of time. Diversification and leverage, honestly, leverage is generally the devil. You know, in stock trading, sometimes I'll use 2-to-1 overnight leverage, but it's 2-to-1. It's not crazy. Okay, all right, so just wanted to go over that. I think that's really, really important here. A couple other charts here to go over, and we'll just go over that. Okay, so if we look at this, guys, excuse me, let me erase these lines. And this is your avalanche chart. Now look at what's happened here. This is fantastic TA where we're at the lows of this to low here, and look at how we kind of kept on. We broke above, right? So we were in here, kind of came down, we broke out, hit it here, bounced, then we came in, and we've gone back. And look at this. So if Avalanche gets up to this level, and just giving you a price point on this, it's approximately the $46 level. That would be significant resistance on Avalanche. Lastly, in the crypto markets, let's look at Ripple here. So look at this long, I mean, this is incredible on Ripple, by the way. To see a trend line going back this far is almost unheard of. So here we have a high. This is going back to when this thing was north of $3 back in 2017. High, 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 and high. So, excuse me. So basically what we have here, and look at this underbelly trend line right down here, right? All through here. You have this pattern. Now, if Ripple can break out, it would be fantastic. It would be an unbelievable move to the upside. It hasn't done that yet, but it's real close to this breakout, this bigger breakout zone, probably around 63 cents, I'm guessing, on Ripple. All right, gold, guys. I put out a post last night on gold saying it could break out on this PCE data. Look at this. It's starting to break out. Where are you looking for this to get to? You're looking at this 2075 to 2080 level. That's that long-term 2020 trend line. Let's see if it goes and tests that line there. Lastly, I just want to quickly touch on oil and natural gas. Oil still has not broken out. Yesterday, it was above 79. It got pushed back down. They're trying to keep this under wraps. They don't want it to break out. I would say that the charts are more powerful, but we'll find out. We'll see if, again, does this pattern of consolidation finally break out above 79, which puts us up to 85. All right, Next up, guys, just a reminder here we have natural gas. It did close above my 186 level. It's still above that. That should continue to yield further upside on natural gas. All right, excuse me. Just a couple things, guys, as we go to center screen here. I think it was a YouTuber that won. I just was notified. I believe it was a YouTuber that won. So make sure you reach out to us via our email. Contact us at support@verifiedinvesting.com, I believe. And then we will go through steps to verify it's really you, et cetera, et cetera. But again, congratulations on 100 ounces of silver worth about $2,500. Amazing. And don't forget, guys, this wheel right here will be filled out with prizes hopefully within a week, and we'll be spinning this every single day for you guys as appreciation for how awesome you all are. All right, you guys have a great rest of your day. I don't have my ball with me. Heck yeah, I do. Let's do this here. Oh, man. Here we go. Where's Ben? All right, here it is, guys. Have a great one. Take care.